I'm here with Andrew Harrex, Investment Director at PE Investments. Andrew, welcome to the Inside Network's Income and Defensive Symposium.
Thank you very much. It's great to be here.
Now, managing a defensive portfolio requires a keen understanding of economic risks and capital allocation, of course. Can you discuss how experience across multiple economic cycles and macroeconomic regimes aids portfolio construction in the current environment?
Yeah, absolutely. Look, we think factors drive markets, and the important thing is which factor is driving markets at any particular time. And what we've found over the last 30 plus years is that the importance of each factor varies. So you need to actually understand what markets you're in and what factors there are. And if you can identify which factor is driving the markets today and through that cycle, then you'll make lots of money. So that's really what we concentrate on.
Well, looking backwards, what lessons from past economic cycles and regimes do you find most relevant for today's market environment, and how can investors integrate those learnings?
Yeah, look, I think we're going to be, our view is that interest rates are higher for longer and inflation will remain sticky. The last time we really saw that was really in the 70s. And if you look at the period from, say, 69 to 82, like through the whole 70s, the classic 60-40 fund lost 2% per annum. So it's typically not a good environment for bonds or equities. The other interesting thing is during that period, they were positively correlated. So what I think investors need to do in this environment is look to diversify their portfolio away from the classic bonds and equities. I think investors should be at their most diverse right here, right now.
Well, given that we're looking at diversifying away from bonds and equities and those traditional asset classes, and you have a broad investable universe, what are the asset classes and themes that you believe investors should pay more attention to?
Well, we're biased in the sense that our flagship fund is currencies. So we are a long-short currency fund. And really, by doing that, that's really just trying to generate alpha. So I think in this environment, alpha is going to play a bigger role than traditional betas. So that's what I'd encourage clients to look at. How can alpha supplement or complement that portfolio? So if I looked at a recent consultant's model portfolio, they had, in this environment, had 25% from pure alpha strategies in their standard portfolio. And I think that's right. I mean, looking at you could see the Future Fund. Future Fund have 18% odd in hedge funds, which are alpha strategies. So I think some of the wiser investors and consultants are moving down to incorporate more alpha strategies in their portfolios.
And just quickly, what do you think could be one of the big market surprises as we move into the second half of 2024?
I actually think the biggest surprise will be if the US dollar continues to strengthen. I think everybody's talked about how the US dollar has had a magnificent run and that it's peaked, and it's just a matter of time before it collapses and capitulates. And so I think one of the biggest surprises to the market will be if we sit here this time next year and the US dollar is at this level or even higher.
We shall see. Andrew Harrex, thanks for joining us.
Pleasure.